Welcome to the First Responders Wealth Network. Our mission is to help all first responders change their mindset towards money and educate how to build long-term wealth through real estate investing. Are you ready?
All right, guys, welcome back. I got Garry Hibbert here, fine-tuned realtor, investor, and podcaster, and we just connected in the flesh not too long ago, a little Halloween bash. So it was great to finally connect. I had heard a lot about you, but it was, like I said, great to connect, and I'm looking forward to having you on the podcast.
Yeah, listen, thanks very much for having me here. It was great to finally meet in person. It's always good to kind of put a name to a face, and you see you on social media, and you look like you're a celeb, and then when you finally meet them in person, like, man, David Knight, what's going on, brother? So it was good to hang out with you.
You're pumping my tires. It's all smoke and mirrors, pal.
No, but it was great hanging out with you and sharing some ideas.
No, that's awesome. Well, like I said, I'm looking forward to, because I know we talked and we were talking about your portfolio and where you're at and the world events and that sort of thing, and we have a lot in common in our theories and whatnot. But just explain where you came from, how'd you get into real estate, and just talk about your journey of where you are from where you started to where you are now.
Yeah, so you know what? Maybe your listeners haven't heard my story, so I'll kind of maybe start from the beginning. And
Sure.
Look, the real beginning was really kind of more like around 2006, 2007, and my brother had brought over The Secret. I don't know if you've ever heard of The Secret. And really just talks about, at least when I saw it, it was like wishful thinking and the universe will provide for you. And at the end of it all, it was put together great. But I was like, man, does this really work? I don't know if I believe in this or not. But I was like, you know what? Let me see if I can get it to work. Anyways, fast forward to 2008. And this is when the financial crisis was happening down in the U.S. and the market was starting to tumble. And people started thinking that it was going to happen up here in Canada. But it didn't. It was more of a sideways kind of a thing, looking back at it, obviously, with hindsight. But the TD Bank at the time and some of the other banks were getting ready to lay people off. I went into work on a Monday, minding my own business, and I saw one of my coworkers get called into the office. He comes out, and I could see the look on his face, and I'm like, oh, my God, this guy just got let go. And so all day they're just letting people go. And I remember just banging away on the keyboard. I'm like, man, I can't lose this job. Because if I lose this job, like we had just bought like our dream home. We got 2 young kids at home. And so anyways, now 4 o'clock rolls around. The manager comes out and he goes, okay, everybody that's still here, you guys are safe. We're done. And it was just such a defining moment in my life. I'm driving home and I'm like, never again do I ever want to feel like somebody's in control of my financial freedom or future. The problem was I didn't know what to do. I didn't know how to get out of it. I didn't know how to create the wealth that I needed to, because at that time there was usually more month than money. And so I tried a couple different things. I tried Forex trading, waking up 4 o'clock in the morning and selling the yen, got into commodities and buying wheat and oil and soya beans and all that other stuff that go along with it. I started a couple different businesses. And while I was doing that, none of it was working. I wasn't really satisfied with where I was going, and I was losing money. And so I go into the bank for the 3rd time. This is the 3rd time now to take all my debt and put it into my mortgage, and looking back, like, man, thank God I actually owned a home, because that's what's been bailing me out. But I was getting tired of doing it because my mortgage kept on going higher and higher every year. And so my financial advisor was like, listen, Garry, you don't know how to manage your debts, your credit cards, your home equity line of credit. And I was like, no. So she says, I'll tell you what, why don't we just get rid of it all? I'm like, yes, do me a favor. Get rid of it all. I want nothing to do with any more debt. I'm finished. And if I want to buy anything, I want to go on a trip, it's going to be cash. So she leaves the office. And this is where really my whole entire life changed. There's a light bulb moment where I'm looking up, but I'm in the office by myself, and there's this index chart in there. And on the index chart, it shows you what the stock market has done for the last 50 years. It shows you what interest rates have been, the presidents, the prime ministers, like everything. It's a nice high-level overview. And I key in on inflation. And I'm like, okay, hold on a second here. Inflation is doing 2%, 3%, sometimes doing 15, 20%. And then I did a quick math on the raise that I got at work the previous year. And the raise was, I got $1,000. So it was pretty good for back then, 2008. But when I did the math, it only worked out to like 1.6%. I was like, I get it.
Yep.
I can't outpace inflation. such a huge eye-opening moment for me to then say, well, hold on a second. What if I had just one more property? How would that change my life? And that was when I started. I bought my first investment property in 2008.
That's a huge point that you just touched there, is the inflation side. Like, a lot of people don't realize how powerful that is. It's the invisible tax, you know. Even with policing and what we're doing, you know, we get about a 3%. I think it works out to about 3% a year that we're getting right now. Okay. And a lot of majority of society is like, man, that's amazing. Like, and it is. Don't get me wrong. It definitely is, because there's a lot of, you know, businesses and people who don't get a raise in like 10 years. And there's even some nurses that haven't even gotten a raise in like crazy amount of years. So, which is unfortunate. But when you start looking at like the inflation and what's going on today, I mean, we're at double digits, really. You know, they might say it's 6% or whatever it is, but in real life, I would say it's about double that.
Oh,
you know?
For sure. Easily.
And to say that, you know, you're actually losing money every year without doing anything else. So that's why, you know, I love real estate. So how did you transform in then the real estate space?
Yeah. So just to add to that as well, too, I remember I put a post up last year on Instagram talking about inflation and where it was going. And somebody had really said, no, Gary, it's not that high. The basket of goods and the way that they weight it is not realistic. Right. You know, especially like the weight that they put on your home and compared to what's happening is just, it's not realistic. And people really got to dig deeper into the real numbers of inflation, like the real numbers, not the ones they say on the news. That is not the real number. But anyways, how did I transition into real estate? So then what I ended up doing was I got a 40-year amortization. And people said I was crazy for doing that, because back in 2008, you could do that. So I got a 40-year amortization. And so now I look better on paper. And I'll keep in mind, I didn't know what I was doing. Looking back at it, was actually a smart thing to do, because now I'm moving into real estate investing. And so I told a friend of mine, like, hey, you know what? I think I want to get into real estate investing. And he goes, okay. And he goes, so just, you know, keep an eye out for me, or, you know, if you hear anything. And so he calls me back a month later and he goes, hey, listen, you know what? Are you serious about this? And I go, yeah. He goes, my dad is going through a divorce. He loves his home. The home's on the market right now. Would you buy it and then let him rent from you? And I'm like, yeah, let's do it. I had no clue on how to even start this, but I'm like, let's go ahead. So it went ahead. We put the offer in, but I'm like, hold on a second. I ain't got any money. So go to the bank. And this was a very short window where you can buy a home using, so 40-year amortization, 0% down.
That's amazing. I remember. I only have heard of those days. I was not part of those days, unfortunately.
Oh, those are, yeah. If you can go back, you probably buy like, you know, the whole block in Burlington. And so, anyways, I put the offer in. So now I got to come up with the closing costs and land transfer tax. I think it came up to like $3,500, something like that. And I go to my buddy, I go, hey, listen, you know what? I don't have the full money. Can you imagine this? I didn't even have like $3,500 back then. Like, that's how paycheck to paycheck we were. Yep. And I go, how about you go in halves with me? He's like, I don't got the money either. And I'm like, see if you can find it, and I'll see if I can find it. And so anyways, we end up finding it, and I do a joint venture. Yes, I don't even know what a joint venture is really. So we just scribble down on a piece of paper, hey, we promise that we're going to do this and do that, and, you know, we're going to split everything 50-50, the profits and losses. And that's how I got in. That was the very first investment property. And then after that, I was like, okay, I got the bug now, because I was getting a little bit of cash flow. It wasn't a lot. You know, we bought it for like $200,000, and cash flow was maybe like $150, $200 a month, something like that. But it was enough to say, hey, there's nothing coming out of my pocket. I'm actually putting some money into my pocket. Right. And that's when we looked at picking up another property. Cool.
So your first deal was essentially a joint venture partner, which is how people scale their businesses. But did you continue rolling with that concept? How did it flourish from that point?
Yeah. So the next property, again, I did another joint venture, but I did this one now with my brother-in-law. And his mom was living in an apartment, and it wasn't a really nice apartment, somewhere in Toronto. And he's like, look, you know what? Why don't we maybe buy something together, right? If you're thinking about getting into real estate investing, and we'll buy something in a decent neighborhood, and we'll find something that's got an apartment upstairs and an apartment downstairs. And the property that we bought, it was in Toronto, and it was detached bungalow, nice. You know? And
if only so that was the price these days, eh?
Oh, geez, can you imagine, man? And you know, and so we bought it. We put his mom and sister upstairs, and we found this other tenant and put him downstairs. And so I remember when I put the ad out on think it was Craigslist. Yeah, I think it was Craigslist back then. And so this guy shows up. He's an older guy. And he goes, yeah, I'm here to see the apartment. I think I was asking like $800. And he goes, look, I can't do 800, but I can do 700 a month. I'm like, all right, cool. Let's shake on it. So he moves in, no lease agreement, no nothing, just a handshake, gives me cash in his hand, and that's it. And, he says that he's going to mow the lawn, he's going to do the snow removal, he's going to do all this stuff for me. And so every time I go there now to collect the rent, because I'm actually going there to get the cash, because, email money transfer, I don't even know if it was a thing back then. I don't think it was, to tell you the truth. So anyways, I go there, collect the cash, and he would give me, $500 or $600 in my hand. I'm like, well, where's the 700? He'd go, oh yeah, come on in, let me show you what I did. I fixed this, I fixed that. And so every month he was doing this. And so what I realized very quickly was that I didn't know what I was doing in real estate investing. I really didn't know how to screen tenants. And so, after about 8 months of that, I think the straw that broke the camel's back was we got a water bill for like $900. And the faucet was not just dripping, but it was actually just leaking water out, even when it was turned off. And so we got hit with the heavy bill because it was all inclusive. And I was like, I'm done. I don't want to do this. This is why everybody at TD Bank, all my coworkers were telling me, don't get into real estate investing.
Interesting. Well, everyone's got a horror story, but obviously, you learned a lot more since that moment, and then continued to scale and that sort of thing. So how did you get to the point where you're at now? Why don't you kind of share maybe what your portfolio looks like even now?
Yeah. So then what we did was I took a step back, and I remember doing a search online saying there's got to be a better way to invest in real estate, a better way to invest, a safer way to invest. And then I came across the concept of rent to own. And I'm like, hey, this is a cool concept. I dug into it a little bit more. And so, really at a high level, you're buying a home, and we did the property first. So you buy a home, then you advertise it, and then essentially a family would come in, take a look at it. They would give you a deposit, and then you would set the price of the buyout price at the beginning that they're going to buy it for 3 years down the road. And so the good thing was that there was a vested interest in the property. They paid a little bit higher than market rent, but they were going to own the home in a few years. And so I love the concept of beautiful homes in beautiful neighborhoods. And that's what we were doing. We started buying these nice homes in nice neighborhoods and helping families get into it. 2010 is when we started Smart Home Choice. And so Smart Home Choice was, the concept on that was be an investor, not a landlord. So because of the headaches that I had with my previous property, I was like, I don't want to be a landlord. I want to be an investor. I want to put families into these homes where they were going to manage it, look after it, and care for it like it's their own. But fast forward 4 or 5 years now, we're helping these families. We've done, probably about 40, 50 of these rent-to-own deals with ourselves and with other investors, because now we're teaching other people what we're doing. We started losing these properties from our portfolio, which was a whole concept. But then I was like, okay, hold on a second. I got to revisit this buy and hold. I got to revisit keeping properties in my portfolio that I'm never going to get rid of. And then that is when we went back and took a look at single family homes and then converting them into 2 units and started doing the BRRRR strategy. At the time, I think the BRRRR, the terminology of it was just kind of starting, but that was around 2015 or so is when we really kind of got back into it. And now I knew how to screen tenants and really understanding the whole game of real estate investing.
Cool. So what markets were you focusing on for that strategy for,
we were focusing
conversions
on
and BRRRRing?
Yeah, Whitby, Oshawa. Well, but I mean, don't forget too, back then, I mean, we were buying homes in Whitby for like 250, 300,000, detached homes, it was a great time to be investing in real estate. And then we moved into Curtis and Bowmanville. And every time we moved to some of these new locations, people were like, why would you go to Curtis and Bowmanville? Because they weren't really hot yet. Mm-hmm. And what we were doing was we were going into the city, having a conversation with them and taking a look at what some businesses were doing. So when we saw Walmart moving to Bowmanville, I didn't have a research and development department in Smart Home Choice. So if Walmart is going there, then they've got to see something. There must be something happening. And then from there, in 2017, when the market really started heating up again, then we moved into Peterborough. And then the same thing as well, too. People are like, why would you move to Peterborough? Like, The market's great here in Durham and in Curtis and Bowmanville. But we were always trying to stay just a step ahead of, okay, we see where things are going, but let's move into another area. Let's move into a different location and see what's happening there before it becomes a hot market.
Right.
And so that's what we did. And now take a look at Peterborough and what's happening in that market, or pretty much anywhere, right?
Yeah. Well, I mean, there's a number of outstanding markets. That's definitely one of them. And I know the vacancy rate, especially for students, if I'm not mistaken, is pretty much zero.
Yeah.
There's such a shortage out there. I mean, I'm sure for all rentals, but specifically, I know for students in that area.
Yeah, and you know what is interesting as well too is because we work with a lot of real estate investors, and when they're new to Peterborough, they ask a lot of questions like, does anybody want to live here? Is it difficult to rent these properties out? And then when they finally do, and some of them will advertise it on their own on Kijiji. And I always ask them afterwards, like, so how many, emails did you get, inquiries? It's like, we had to shut it down. We had to shut it down in like 2 days. We got killed.
That's amazing. Yeah, that's wild.
Yeah. It is.
That's
wild.
when you know your demand is high. When you can't even keep up, or your rent's too low. But you kind of touch on it. So when you're first starting out, I know you help a lot of people get started, and the biggest hurdle I find is just getting that first deal. Or if you're starting a new investing strategy, starting that doing that first BRRRR or whatever, that first rent to own, whatever the case may be. So what do you, I guess, say to people or your students starting to invest? One, I guess let's start off with, what do you find is like the biggest hurdle that they need to overcome?
The biggest hurdle they have to overcome is a couple, but I would say fear. Fear, right? It's fear of the unknown. And then also, number two would be listening to people that are not successful in what they're trying to do. And that was something that I did in the beginning, right? Where I was listening to people at TD Bank. I remember when I asked one of my coworkers who had an investment property, I'm like, hey, look, I'm thinking about getting into real estate investing. And he's like, no, don't do it. But you have an investment property. He's like, yeah, but my tenants aren't paying. You can't get them out. It's such a headache. And then I went home, told my wife about it, and came back. And I'm like, thank you so much. Like, man, I can't believe I was going to make a big mistake in getting into real estate investing. This is like 2001. And he goes, listen, man, that's what friends are for, brother. That's just to tell you that, listen, if you're going to do it, listen to people that have had success in it, but also listen to people that have had success, but also had failures, so they can tell you and steer you away from making those type of mistakes, right?
Yeah.
And then number three, trying to think that you can do this all on your own, right? There is no rich hermit, so find a realtor, find teams that have been doing this for a number of years, that can help and guide you down the path of selecting the right market, picking the right property, understanding the strategy that you want, right? Because there's different strategies out there. And a lot of people get caught up in the shiny stone syndrome, where they join a webinar, oh, I love rent to own, I'm going to do it. And then they go next week and, oh, I want to do the BRRRR strategy. And, oh, maybe I need to invest in Edmonton, or maybe I should invest in Newfoundland. And they're all over the map. And so one of the best advice I got in the beginning was just pick a strategy and then master it. And that's really kind of what I did in the beginning. I mastered rent to own. I wrote a book on it. And I did that for about 4 or 5 years. Then I went into BRRRR strategy, mastered that, did that for about 4 or 5 years. Then got into private lending, and so kind of mastering that right now as well too. So really just trying to stay focused on a particular strategy, because you could be all over the map and before you know it, you're having issues and problems.
What do you say to new investors in this market specifically when we're at the peak of all peaks? Sometimes people say it's inflated and people are kind of hesitant, and you should be a little hesitant and at least cautious in investing for cash flow for sure. But what do you say to those new investors now that are coming in and they're like, whoa, everything's just so expensive, I can't find property somewhere? What do you say to those type?
Yeah, sometimes you got to drive to buy. There's nothing wrong with driving to buy. I think a lot of times people are like, oh, well, you know what? I'm going to wait until the market crashes. Look, if I'd have done that back in 2009, 10, 11, 12, 13, 14, 15 to 17, I would still be waiting, right? Yeah. So don't worry about trying to time the market. I'm just saying, time in the market. Number two, just buy for cash flow, right? Yeah. Like there's great markets up in Peterborough, Kawarthas, out in London. I don't know that area very well, but there are always deals. Yeah. And the more that you go out with a realtor and look, Eventually, you will find something. That I can almost promise. There's properties in Peterborough right now that are still 300,000-400,000 that are sitting in the market that have been there for like 100 days. It requires a little bit more of an appetite, but they're there.
Right.
Right?
Yep.
And so then maybe you need to do a joint venture with somebody who's experienced. There's different ways of doing it. There really is. So buy for cash flow. Do not worry about where the market might be going, because I can tell you this 100%. Last year during COVID, I interviewed so many people. Nobody predicted we were going to be here. Not one person.
Right. Yeah.
Right? So we don't know if this is going to go for another year or two. I think it's going to eventually start to cool down. I can't see it keep it going that way, but I don't know.
Right.
What if they decide to print more? What if they just keep going?
And I really think that's the issue too. And we're in like a time in history where we've never been here before. We've literally never been here before. With the amount of money that they're printing, with the amount of demand, little on the market, it's just a combination that we really haven't seen at this point. And like you said, you talked earlier about inflation, just buying something that cash flows, buying weight, just buying weight over time. They'll pay off that mortgage. You get a little bit of cash flow and appreciates over time. It might dip, but who cares? You're still paying off that mortgage and you're still getting cash flow. So as long as you do your market analysis right and there's a demand in whatever it is that you're buying, you're going to be good in the long term. And
exactly. I think this will be beneficial for people who are like, yeah, okay, well, maybe a little bit easy for you to say. And I say, okay, fair enough. So if you want a crystal ball for the future, the best way to figure out where we're going is to study the past. And it doesn't always repeat, but it does rhyme. And so let's go back to 1944. We won't go back too far. So 1944, Bretton Woods Convention. This is after World War II. The U.S. has won. They now own 2/3 of all the gold in the world. 44 countries come to Bretton Woods and they peg their dollar to the U.S. dollar, and then the U.S. pegs their dollar to gold. So now you have sound money, right? There's a big difference between money and currency. There's fiat currency and you got money. Everything's going great, 50s, 60s, 70s. Vietnam War comes along. Richard Nixon's got to fund this war. They need to print more money, and what do? Richard Nixon comes on the television and says, we are unpegging the US dollar to gold. So when he makes that statement, cash becomes trash. And if you can understand that simple concept that we are now, it's just monopoly money, then where is the true wealth? It's in either gold or silver, hard assets, or real estate. Because now they can just print as much as they want. It's not backed by anything. Right. And so now this is where we're at, where you go now to 2021 and look at the printing that they started doing, especially back in 2008 to get themselves out of that financial crisis. And this is when I started listening to some of my mentors and understanding that they were going to print to infinity. They weren't going to stop. I didn't really fully get it and grasp it, but the more I dug into it, I was like, I get it. They're just going to keep on printing, and they're going to keep printing. Yeah. And they have very few levers now to pull. Like, I know they're talking about they want to raise the interest rates. They should have raised the interest rates the way inflation has taken off, but their hands are tied. And if there's any kind of a hiccup, they're probably going to lower it again. Now, I'm not predicting that, but I'm just saying, if you want to protect your wealth and your energy, you got to put into hard assets, because the last place you want to keep it is in the bank. That I know.
It's funny you talk about that. I'm just kind of midway through the book, The Creature from Jekyll Island. Oh man, it's an eye opener. And I had heard about the Federal Reserve and how it was formed and the people behind it and kind of the unknown behind it. And man, like, any of you guys listening to this, definitely take some time and listen or read that. It opens up your eyes, and then you get a kind of a better understanding of the importance of where you should put your money and wealth. And real estate is definitely one of those pillars. So
yeah, no, it's a great book. And if you even go back a little bit further, the Rothschilds and the Rockefellers, I think it was 1904 or 5, where they took the financial education out of schools. There's a reason why people come out of high school and they don't know how to read a credit report, and they don't understand mortgages or the difference between simple and compound interest. This is not like they just forgot to put it in. They've designed it that way. So as soon as you get to college or university, you have credit cards and you have no idea how to properly use it, right? And they handcuff you to debt.
Yeah. You're almost a prisoner to the exchange of time and money, you know, the exchange of our time for money versus the idea, the financial awareness and education and IQ that you get through, like you said, financial education, where when it's been kind of wiped off the table and you don't have that growing up as a family around the dinner table or talking about it, you're not exposed to it.
Right.
You know, that's one thing I honestly, man, I find that just learning real estate period has opened my eyes to, you know, e-commerce, or just the idea of how the economy works and how the dollar works, and just everything's kind of intertwined. But having that financial awareness of just that one asset class of real estate, it really helps you understand everything else that's kind of going on in the world.
And also just understanding what debt is and the difference between good debt and bad debt. Because you hear the word debt, yeah, and you're like, oh, okay, well, all debt is bad, but it's not true. You know, there's good debt. How do you use it to your advantage? You know, I remember when Robert Kiyosaki said that your house is a liability. Whoa, you're lying. What are you talking about? You know, or when your financial advisor would come over to your home and you'd feel like your asset, you know, the asset column, you'd put your car down. You're being taught incorrectly. The good thing, though, is when you start listening to these podcasts and when you start attending these webinars and listening to people that where you want to be, your mindset starts to expand. And then it's like taking that red pill, because once you listen to it, once you hear it, then you can't unhear it. And that's what it was for me. I just started really gobbling all this information up. I'm like, this is crazy. Oh, come, I've never heard about this before. Why is this not taught in schools? And now circle back to The Secret. And that is when now it all kind of started tying in together for me and how it all kind of worked. So then kind of going back to The Secret, and then I was like, okay, fine, I'm going to start writing this stuff down. And so I started putting all this stuff down on my whiteboard, what I wanted. And by the end of the year, I'm like, man, this is crazy. I started checking this off. I got this, I got that. I'm going to push a little bit further. And so then I remember writing down, I want 4 investment properties. Now I'm like, man, I don't know if I can get 4 investment properties. I don't have the money. And at the end of the year, I had 4 investment properties. I'm like, I get it. It has nothing to do with money. No. Like, see, people think that you actually physically have to have the money, and it's not. It's about goal setting and writing down what you want. And I know that it sounds very kind of high level universe kind of talking,
little woo-woo sometimes.
It's not. What you're doing is you're setting a roadmap. You're writing down your goals. What your mind thinks about most is it will attract to it, and then things will start to kind of present itself to you, and then you either make the decision to do it or not. But more importantly, here's what's more important than just actually having those goals and acquiring it and going for it, is that it also allows you to now say no to things. So, well, no, hold on a second. This is not part of my roadmap this year. Maybe next year I can put it on my whiteboard, but for now, I'm focusing on these 10 things or 12 things or whatever it is that you've written down.
Yeah. Amen. Manifesting and just visioning and actually saying it too is a huge one for me.
Yeah. Absolutely.
Sure. Well, that's awesome, man. Well, anything that you can maybe suggest to first responders, people working on the road who want to get that first property, that first hurdle? I know you touched on fear, but maybe something that you can suggest that helped you.
I think one of the things that helped me in the beginning was joining like a real estate investment club or a group and just writing things down, listening to what they were saying. You know, in the beginning, you may not understand all the terminology, like, you know, HELOC, OPM, you know, a home equity line of credit or other people's money. You may not understand all that stuff in the beginning, and that's fine. But just write it down, write the acronyms down, and maybe afterward you can Google it and search. But listen to the stories, listen to what you're hearing, and before you know it, within, you know, you should be able to make a decision within 3 months of, okay, this is the strategy that I want to go with. This is the realtor that I'm going to use. This is the team that I want to focus on and have them help me. Because here's what's going to end up happening. Once you start going out, then before you know it, you might end up putting an offer in. And, you know, for your first few, put some conditions in if you have to. But at least just start practicing. Just start going through the motions, and you'll see and get a feel of how hot the market is. Do I need to go in firm? What type of properties will allow me to maybe put conditions in? Do I maybe need to do a joint venture? But you just got to kind of just start doing it. And before you know it, you'll have a property under your belt, and you'll realize that, hold on a second, it wasn't really that difficult. You know, the more difficult thing is, I hear this all the time when I talk to beginning investors, is collecting the documentation. Like, you know, all the paperwork that the banks need today, it's ridiculous. Just start going towards it. And before you know it, honestly, You'll have one and you'll realize that, you know what, it actually really wasn't that difficult.
That's great advice. I mean, baby steps. We all start off somewhere. So it's just sometimes we become overwhelmed, and that fear is a big one. And yeah, surrounding yourself with people is huge. So
big time. Because they can't help but rub off on you. You know, we were talking about that a little bit earlier, that, you know, the more that you spend time with people that are where you want to be, they'll just rub off on you. You'll start picking up on, you know, what they're saying and things that help your mindset. And, you know, I know one of the things that I used to do in the beginning, which really helped me, this is a good advice as well too, is in the beginning I was listening to Jim Rohn, love Jim Rohn. And I remember in the car, what I would do is if I heard something really powerful, I would just hit pause, and then I would ask Siri to record, and I'd say, you know, I'd say a quote, hey, help as many people get what they want. You can have every and anything you want. Whew, powerful quote, you know, or make the goal to become a millionaire, not for the money, but for the person you'll become to achieve it. And so I would just say these things, but paraphrase it. And then it just started becoming a part of my vocabulary, because I heard it so often, or I'd go back and listen to it again. And I found that just to be so helpful for me, you know, to be able to rhyme off some of these powerful quotes that can be life-changing.
Hey man, you said it best right there. And Jim Rohn, one of my favorite all times. He's so good.
Yeah, he's great. And for anybody who doesn't know, he was actually Tony Robbins' mentor.
Yeah, he was.
Right? So yeah, Tony Robbins learned from the best.
Amazing. Cool, brother. Well, how can people get a hold of you if they're interested, or reach out for your services?
Yeah, so if they want to learn more about me personally, they can go to GarryHibbert.ca, so GaryHibbert. And if they want to learn more about what myself and my team do with the club, they can go to smarthomechoice.ca.
Perfect. Awesome.
Right.
Appreciate you coming on to my podcast. I was going to say me having on to yours, but that'll be next. But
absolutely.
Anyway, look forward to keeping in touch with you, man. I love sharing your story, but also getting to the point where, hey, I can take 6 weeks off, 8 weeks off, you know, but it all starts off by just taking that first step, for sure.
It does. And you're right? You know, being able to take those time off, that was all planned. That was all written down. That was all put on a Bristol board. That was like my wife and the kids sitting down and doing that together. So map it out, you know, have a roadmap, and don't just kind of wing this. It's too important just to kind of wing it, right? It's incredible that you can drive to Florida at night with headlights and just see enough to get there safely. And so really what I'm saying is that you don't need to see the whole entire path. Just see enough and then move forward, and just keep moving forward. And before you know it, you know, you'll be on the David Knight podcast.
Awesome, dude. Well, I appreciate it, and I will let you know when this comes live.
All right. Beautiful, man. Listen, thanks for having me here, and I love what you're doing. It's amazing.
Thanks for listening. Don't forget to rate and review on iTunes. Also, check out our website at 911wealthnetwork.com or contact Dave directly at 911wealthnetwork.com. Stay safe out there.